from what I understand.
Yeah, that's true.
I'm actually working on right now in Elizabeth City. How far is that from you in Charlotte?
Oh, that's probably a good 3.5 hours,
Oh, okay.
but I'm not. I mean, anything within 5 hours, and I know I'm not talking about driving all the time, but distance doesn't make that much difference to me if it's a good solid asset.
Yeah, there you go. There you go. So let's get this meeting started. We're pretty excited for everybody. We've been doing these weekly masterminds. We just started doing it, what, Alden, maybe 4 months ago, something like that.
Maybe less. Yeah, but we've seen some good outreach. It's good constructive conversation from new investors, seasoned investors, note investment educators, and real estate operators. Really, nationally, we have had individuals like Nate Hare from Directed IRA come on and help educate into alternative investments utilizing your IRA, self-directing that, as well as note investment educators like Nathan Turner, who owns Diversified Mortgage Expo, Patrick Franz of the Note Investor University, those are just a few of the many industry magnates and professionals that we've had on the channel. But I'm Alden Guajardo, president of Silvercrest Opportunity Fund and vice president of Windmill Homes and Mobile Mailbox Money. And today is our Thursday, 12 o'clock Arizona time mastermind here, brought to you by Silvercrest Opportunity Fund, where we provide you a live look weekly, every week, 12 o'clock Arizona time, into the back office door of what we do, how we originate, and ultimately to provide you a bow of capital investment opportunities into performing debt, either first or second liens. And we'll talk about kind of the plethora of deals that we have, but I just want to try again this week. Let's see if I can manage sharing my screen here, and we'll just dive in with a quick video that'll detail kind of what we have to offer, where we help investors time travel, start cash flowing in as little as a 30-day program.
They say nobody can time travel, but what I do helps people reclaim their time and live like the future version of themselves today. Instead of waiting years to build wealth, my investors receive pro forma cash flow from day one. They don't just invest, they become the bank. That means secured positions paying 10 to 14% interest, backed by high equity cushion, double underwritten assets, designed for long-term stability. And here's the best part. This isn't just about returns. It's about impact. Every position helps keep hardworking Americans and ITIN holders in their homes while creating new solutions for affordable housing. You're not just earning income, you're changing lives. So imagine this, you're traveling the world, enjoying retirement, living fully in the present, while the cash flow keeps coming in month after month, secured by real property. Because true financial freedom isn't about waiting decades, it's about collapsing time. It's about living your future now. Time travel with Silvercrest Opportunity Fund today.
So I just wanted to kind of share, that's a quick little synopsis, as our income-oriented investment strategy is literally tough to find and not so much publicly available in any other avenue, to start cash flowing in as little as a 30-day program in pro forma returns, double-digit interest rates, and specifically in the fund at 10% for 1 year, 12% for 3, and 14% for 5, to have an evergreen fund situation to participate in as little as a 30-day program with our deal flow that we have, is like a golden nugget out in the marketplace right now. So whether an individual's accredited, they can invest in the fund, non-accredited, they can buy a note, a single note, and they become a private lender in as little as a 30-day program, all areas of opportunity, and performing debt. Why is that so important right now? Well, because debt is at an all-time high, and we utilize strategies in order to provide some form of lending based on equity in individuals' properties. They may have a 3% mortgage. They may just need to refinance some credit card debt. They may be a high net worth investor, literally, that just has a couple too many properties and ultimately has millions of dollars in equity on their homes. All areas of discussion. And additionally, with our primary business of providing affordable housing in the Arizona market, provides probably the largest portfolio and diversification capability to hedge your bets outside the stock market. And our objective here today is to provide you those areas and avenues of diversification while providing risk mitigation up front. We're not just here to sell you a product. We're not here to just, elicit investment in Silvercrest Opportunity Fund. We're here for long-term growth and to bring this to the available market as our $50 million tranche of notes and creative real estate transactions unfolds here today. So I've got my partners, James, Jason here. We've got some deals on the table. That was a quick little house cleaning. We recently attended the American Lending Conference, picked up a couple contacts from there. We'll be following up with them. Just finished up with Nate Hare on the vlog, VLOG Mobile Mailbox Money at Arizona Real Estate Investors Association, talking how to invest your IRA and how alternative investments are the largest item being Googled by capital investors. So let's kind of dive into a couple of deals that we have on the table. And if we could get some help muting the individual that's got their there you go.
I got it. I got it.
So let's dive in here, fellas. Jason, let's talk about a couple of hot deals. Time is of the essence on deals that we see here today. What does that mean? That means we have a 48-hour window in order to capitalize on these positions, and they're gone. What do I mean by they're gone? They get taken, absorbed into other avenues, other financiers, and things of that nature. So these are literal cream of the crop opportunities that we're bringing to the table today. So Jason, appreciate having you on the team and the channel. Let's dive in.
All right, so let's go. Let's talk about one. This is a great example of what we're getting. This house is in Elizabeth City, North Carolina. We're literally working on it as you guys were talking. We're trying to put the file together to send over to underwriting. This property is at. You want me to share my screen or just talk?
Yeah, go ahead and share your screen.
Share your screen. Yeah.
All right, let me figure that out then. All right. Did you make me the host?
I did put on it for you to share with you for anybody that's here. So you should be able to see it.
All righty, let's look at this one first here.
And again, just to preface, these are deals not seen literally anywhere else in the nation.
The note's not even created. I mean, we're working these live right now. So this lady, literally, our office is talking to her. This lady, let me read let's see here. She needs 20 grand. She bought this house in 2016. She owes a total of 160. You can see the estimate there. She's somebody that wants to stay in this house. It's been her house since she bought it. What's that? 9 years ago. So she'll be in this thing almost 10 years. You're talking about a $20,000 note roughly, paying great interest. I'll let Alden kind of handle the monthly payment on what you'd be getting on this, but this lady is at about after we give her the loan, she'll be in this thing for about 62% loan to value. So there's a lot of equity in it. We've got a motivated, a motivated homeowner who loves the house and wants to stay in the house. A lot of these folks just got into health trouble or had, a job issue and they're back on track. They can afford the payments. So we're typically just giving them a 3-year interest only type of situation to allow them to have time to, refinance that out of that loan, out of that higher interest loan, and keep their house. So this one is literally being worked as this call is being done. So that's how. Now here's the other thing: the auction on this property. This is why we have to do this quick. The auction on this property is the 18th. So we've got what? 7 days to get this figured out before the auction is done. So we don't have a whole lot of time to create the note, put the note together. That's why we're not creating the note and then selling the note. So that's why you have this opportunity here. So that's one.
And a quick three, questions that people ask, what's the fallout, or why are we buying? Why are we getting into these positions? We're trying to buy this house. Our objective was to buy the home, not just lend them the money in order to, straighten things out. So if worse comes to worse, we were trying to buy the house originally because we see profit in the deal. If the individual that's borrowing the capital that lives in the property based on their equity, they go non-performing, we'll buy out the first and ultimately fix and flip the property with our lenders that we have that have already lended on properties that we've been fix and flipping in single family residence. Just quick recap from last week, we got a deal funded in 24 hours of a fix and flip need. Also, those benchmarks on the seconds, it's 65% loan to value or less. There's sufficient equity cushion to provide us additional profit if that goes non-performing.
Absolutely. Yeah, that's a great point. Obviously, we're getting these because of our outreach to try and buy these properties, and we're getting them in about 7 or 8 states right now. So here's another example of this one is in Florida. We get them in Florida, Texas, Georgia, North Carolina, Arizona, Tennessee. So here's a property that this person purchased this 23 years ago. The total balance is $96,000. They need about $15,000 to get current. It's worth, you can see right there, it's worth $295. So another extremely, after this loan is done, you're talking about maybe a 35% loan to value with a great interest rate for the investor, a ton of equity in a situation. Trust me when we tell you, that's why we're looking for partners that will fund this and not want to take them over, because that's what we're wanting to do. We want to come in and help these folks, one, try and keep their house, which we've done, but we're trying to buy the house. So our foot is in the front door when in the case that they cannot make the payments. We're not going to allow this thing to foreclose. Obviously because of the equity, but from a funding standpoint, from the note standpoint, the LTV is 35% with a really good rate of return. And, we get a ton of these, but again, this auction is coming up on the 29th. So we don't have a whole lot of time to, we need the funding folks to be on board from day one so that when the note's created, we can fund it and stop the foreclosure.
So the summary on all this is it is a short time window in regards to funding the specific transaction. The investor, and I think Catherine, we're going to have her ask her a couple questions that she had early on. But the premise is you're really coming on as a note investor, that you're getting a specific stated return, that really it's for the premise of for the buyer, the current owner, to stay inside their property and get them straightened back up. There is a chance, obviously, that homeowner that borrows money from us in a secured second lien could fall out and could go south. The deal could go south. That's why we're very cognizant about what is the situation with the first lien. What type of first lien is it? Is it a traditional bank loan, which most of them are? They're low interest rate, so that current owner really doesn't want that first lien paid off and to have to pay a higher interest rate. Their benefit is that they're able to cure their current situation that got them behind and got them into foreclosure. If obviously, again, if they fall out and default on the second lien, it does give us the right as the lien holder to foreclose on the first, on actually the homeowner, which we would take over the first lien position and foreclose. And it could be a real financial win, which we could have an opportunity to work out with that current homeowner as an equity position, which Jason will talk about. Because the name of the game is to help out the current homeowner while earning a great return on a specific investment, which is a very low amount. We're seeing anywhere from investments from $30,000 to $50,000. But it is very important to know that we do evaluate that first lien note and look at things like escalation clause and see how much could that note actually go up to prospectively if the person is in full default and goes into foreclosure, and it actually could go through the actual auction courthouse steps or so.
Yeah, and James, to kind of add to that, we were just on the phone an hour ago with somebody that's the situation, that we're not going to be able to, there's an active open lawsuit with the first mortgage. We're not going to be able to do a second lien. We're just not going to take that kind of risk. What we're talking about doing, because of the amount of equity he's got, is we're talking about coming in and just buying the first mortgage, just buying, and then reworking what he's behind so that we control the note. Otherwise, you're not putting a second on it. You're just not going to, because you don't control it.
So listen, that's probably the most intelligent situation and a savvy note investor or real estate investor is going to realize how clean is this specific deal. And obviously we speak with Jason a lot about that. They have a law firm that is clearing all the liens and validating every lien that's on the property. Jason just mentioned the property. It has a lawsuit. That's a lot of hair on that specific deal. We either have to completely clear out the lawsuit and the first lien situation, so we have a free and clear title on the property, and we're the only lien holder. So it's really important for us to investigate clearly what does the document say in the first lien position, and how is that default, and is there any lis pendens or any memorandums on the property that could call out the specific title for a successful transfer. That's why you use a law firm. We have a seasoned law firm behind us to make sure that it's all cleared and go from there.
Absolutely. But that kind of goes to not everything we do is a second. In the case I just mentioned, we're going to create a first. We're going to help the guy rehab the house, and then we're going to put it on the market and sell it. Pull that thing completely away from the bank that he's having all the trouble with, so that bank does not control the title anymore. He can keep his lawsuit going because they wronged him, and you can continue the fight at that point, but they're not going to control the title, and we be in a second position. So that's a great example of somebody that's like, listen, I'm willing to sell it, and we're going to come in, we're going to pay the thing off, we're going to loan enough money to do the rehab, we will manage the rehab so that money isn't spent at the blackjack table, and then we'll manage the sale part of it, and then give him part of the profit. So he had this thing sold at 300 grand, it's worth 450. So we're like, if you do it this way, you're going to make an extra 50 grand, and you're not going to have a foreclosure on your record. So we really do try and do what's best for the seller or the homeowner. But in some cases, because of the situation we're in, we're able to walk in and provide a great first lien position for somebody at 10, 11, 12%, but also control the deal from the time that we refinance to the time that it's sold.
Very cool. I think Catherine had a question early on. Catherine, do you mind? Do you like to pose that question again?
I was just asking, what is the process? Like, if I have other people that are investors and they would like to be a passive investor. How does that work in introducing them to your program or getting them in contact with you? Is there a process? Because it looks like you have Mailbox Money, mobile Mailbox Money, and then there's the Win Investing. And I guess I'm a little bit confused about, the different entities. And when I try to explain to someone what you do, I can give them an overview, but um, I didn't know how to refer them to you.
So
So
real quick, mobile
go ahead.
mailbox money is where we post our notes for sale, mobilemailboxmoney.com. We started mobile mailbox money like as an education piece, and it start as we upload our notes, do education online. So that's for a non-accredited investor, someone looking for one note, one investor per note, and they acquire that position. And that's where the mobile mailbox money comes in. A lot of our videos, online advertising, and things of that nature are around mobile mailbox money. Those notes come from our main business that we started, Win Mobile Homes. WinMobileHomes.com is the largest licensed dealer of manufactured housing in Arizona. And we started our business buying, rehabbing, and reselling manufactured homes on seller finance terms. We got such traction doing so. We've now met Jason and Todd, who we met at the Diversified Mortgage Expo, where we post those positions on mobile mailbox money through single family residence lien positioning. So now we're stepping into the position of lending on real property collateral that's no longer personal property manufactured housing. We still have that primary business, and those notes yield attractive yields, as do the single family notes. So we're now elevating our offerings that we have through different avenues to provide additional diversification. Through our success of our businesses, we have started a fund. Silvercrest Opportunity Fund is a 506c accredited investment fund where we absorb these positions that we debut on our mastermind here into the fund. And our accredited partners become a per unit owner share in the creative real estate transactions that we conduct, providing not only risk mitigation, but also a fully passive rate of return out in the market to go live their life, spend more time with their family, travel, or really just get outside of CDs, low yield mutual funds, and stock market volatility that has people losing their hair from stress. So that's kind of the development. That's been an 8-year process of us sitting here today. We started the mastermind, within the past couple of months, to bring more individuals such as yourself, Catherine, to the table. You probably never would have heard about us prior to us doing the mastermind. So that's kind of little, descriptions of our businesses and the opportunities that we have to share with somebody about what we do. I would share mobile mailbox money. They can sign up for our
Okay.
master. They can sign up for our masterminds on our website. We have people monitoring the chat box if they have questions, so they can literally talk to a live associate who's intellectually savvy about note private lending and investment in Silvercrest.
Yeah, and as
Okay.
as Alden mentions that our default really goes to someone like you telling people, hey, just go to mobilemailboxmoney.com. It's a simple sign up and you can actively see notes for sale. And that's the beginning basis. As Alden also mentioned, if they're an accredited investor, they could go to Silvercrest Opportunity Fund. That Silvercrest Opportunity Fund site is not as dynamic and robust as the mobile mailbox money site. Mobile mailbox money site will kind of give them a flavor of active notes that are actually available for sale. We actively are updating that site on a regular basis because it has the actual notes available for sale. So that's where you would probably send them all to. It'll have our
Okay.
phone number in there, and then there's live chat with. We have someone on there from 8 a.m. actually even Eastern time, 8 a.m. till probably about 8 p.m. every single night. That's actually a live person. She actually lives in the Florida market. Her name is Sunny Finkel, and she monitors that.
Wow. Okay. Thank you.
How did you hear about us, by the way?
Mobile mailboxmoney.com. I don't even remember um, because I am I've been part of Eddie Speed's group in Texas for a long time, but I haven't bought a lot of notes. It's been more education. I do have a couple of local notes here. And then I have also followed Fred and Tracy. They have Note Investor. But then Nate Turner also, I was on one of the programs he was on. So I'm not sure where I got the link, but I just remember the information that was shared sounded like it would be worth the time to stop and see how you were set up. And honestly, the fact that you try first to help the homeowner instead of coming in like so many other entities seem to do, where they just want to be able to take the lion's share of the profit. You give someone, it sounds like you give someone the chance to utilize what you provide. It's a fair rate of return for both parties. And then if they can't perform, you have a backup plan. So everybody ends up winning. It doesn't, it sounds like you have enough different options to where if it has to be rehabbed, if it has to be sold, if it has, if it goes into foreclosure, you know how to execute on each one of those situations. Sounds like you're really busy.
Catherine, what we need to do, we've got this recorded. You need to buy a note from us because that was a great pre-testimonial that you put out right there. That you did awesome. There was no stutter, no nothing. You're fully convinced. You're ready to go. You're 100% in, and you haven't even bought a note yet. That's exciting. But what's interesting is Eddie Speed at the Note Expo. We did a personal interview with him last time we were at Note Expo in Dallas, Texas, and talked actively and candidly with Eddie Speed in regards to our note process and how we do it. And he was fully on board. He's like, you know what? That's a great program that you guys actually have. Nate Turner, same thing. I mean, we get tons of different interviews from different national and even international investors, especially in the note space. It's just a great quality program that we have to offer. And we're excited about offering, even as Jason, we brought his team on from Florida, and they specialize in second lien note investments. And we're moving into that space with them. And we're excited about it because, like you said, I think the super win of it all, it's really not necessarily a vulture program that we're immediately defaulting the people and immediately trying to take the house from underneath them. We actually have a program with them that is sensible. Yes, they're paying a fee, an additional fee, a higher fee but it's a second lien. There's a higher level of risk. So it's with it. So it makes sense. So you are our North Carolina #1 advocate in the near future. We're going to have you on regularly. You're going to restate everything you just said word for word. I love it. I love it.
We get a lot of opportunities in North Carolina too.
Well, that's important.
Jason, just so you're aware, we're still sharing your screen here.
You want okay?
Let's do one more that you may have on the table. That would be 3, and I think a total would be around 50K with the options that we had here today. I mean, to find positions at 20 to 50,000 bucks, that's a tough thing to find in a risk mitigated program. How would someone go about even finding opportunities like this? They'd have to build up a huge mailer program, huge, entity, big brand, maybe try to go to paper stack, those positions you got to negotiate for a discount. I mean, man, I could just rave and rant right now about how scarce positions like this are.
Let's pull one from her backyard. How about that?
Let's do it.
All right. So this one is in Charlotte. Let me read the notes here. You can see that the Zestimate is 360. This lady owes 170. The auction is scheduled. We have about a month on this one. The auction is the 12th. She needs about 50 grand, and of that 50, it's going to pay off some credit cards. So the goal for her, she wants to stay in this house too. So we're going to lend her 50 grand, pay off her credit cards, help her boost her credit score, obviously, because her goal is she wants to keep this house and eventually I don't remember what the balance on or what the amount on the first, but it's like 4.5%. This is clearly somebody that doesn't want to sell. They want to stay in the house. So we come, everybody else is saying, hey, I'll give you 180,000 for your house. Like everybody, she said she's getting 20, 25 phone calls a day from people saying, I'll give you 180 for your house. And she's to a point where she just blocks them. And that's what we're finding out is they don't even take phone calls. For us to get through to these people, it takes 7 or 8 emails, texts, and phone calls. And we have to assure them, hey, we're not going to lowball you. We're trying to help you save your house. So, this is another great example of a house that'll have about a 60 to 65% LTV, with somebody that just a great person, ran into trouble, ran up her credit cards because she had some health issues. She's back to work. She's, somebody you just honestly want to help. And so another great situation, exactly like you just described, Catherine, where we're walking in kind of on a white horse, and we'll help her, keep her house. Obviously, we're doing this for money. Our goal is to make money. We're a business. We're not nonprofit, but it puts her in a situation where she gets to keep her house. It gives our note investors a great return with the security that if something goes wrong, we're going to step into this thing and either help her sell it or take it over. But we won't be fighting a long drawn out foreclosure process because she clearly would like to take some of the equity with her. And if she works with us, she understands, listen, it's the difference between selling your house for 180 or 200,000 versus selling it at 340 to 350 and getting a lot of that equity. And so we explain that to them when we're talking to them on the phone. We won't lend them the money if we think they're going to be a problem. We just won't get into that situation. So we just get tons of these. We've been telling people, well, we probably get 2 a day, and I don't know if that's even close to what we really get. We get probably we're having 8 to 10 conversations a day with highly motivated folks. So these deals are, we have access to a lot of deals.
So for this one specifically at 65% loan to value, we're looking for a passive partner for 1 year at $416 a month, paid monthly. For a 2-year program, it's $500 a month. And a 3-year program is $583 a month. Remember, this is a passive program where we pledge this position via hypothecation to a passive lender with our group. You're now vested with one of the largest operators in fix and flip, private lending, and seller finance notes, where you partner with a qualified operator in a debt strategy and a bank quality return. So, 416 a month for 1 year, 500 for 2, and 583 for 3 years. Those are monthly payments, and you can figure that rate of return on a calculator. It is an interest-only payment, so a mortgage calculator isn't needed for that. These positions, seconds and first on single-family residents, are purely interest-only notes. So we originate those positions at an interest-only 3-year term to the homeowner at a higher rate of return than what we borrow at, providing you sufficient cushion, sufficient confidence to partner with us in a position that's risk mitigated. Those are the deals that we have in single family residence that we've cultivated our brand enough to get a backdoor view into some new opportunities with, another qualified operator teaming up. They call us the what's it called? The dream team, call it. So we also have some manufactured home notes in our primary business, and this just happens to be one that we have that's coming available. This is a 4-bed, 2-bath, if I can get this to work here, in a family park that we did rehab on. Actually updated electrical, plumbing. This isn't working for me. Hold on, give me 1 second, real quick. So it's a double wide 4-bed, 2-bath in the Mesa Market off major cross streets of 56th Street and Broadway, Central Mesa Market in a family community. This home, let me just pull up my Excel sheet here to kind of quote some numbers here real quick. This buyer should receive approval, I think today, hopefully so. They're putting a $5,000 down payment. The home is currently pending at, get all turned around here. 114.9. So 115,000 just below. They're putting a $7,000 down payment. If you don't have a mortgage calculator, do yourself a service and go download Carl's mortgage calculator. It's actually free, and that's how you can calculate your rate of return. That is Carl's mortgage calculator. So at 114.9, this 4-bedroom, 2-bath, the individual buying it will match or beat market rent with ownership. Why is that important? Because that mitigates your risk as a note investor. If this buyer comes and buys this home on terms that match or beat market rent, what's their alternative of housing available in our market that if they default, what's their options? Well, average rent in the valley is about 2,000 a month for a 2-2, a nice 2-bed, 2-bath with no yard, no granite counters, no new cabinets and stuff like that. Whereas in a 4-bedroom, that rent could be 25 to 3,000 bucks a month. So on this property with a $7,000 down payment, this buyer's monthly payment with the amortization schedule of 20 years, 114.9, 7,000 down at a 20-year term is 1341.76. That's the monthly payment. The principal balance is 107.9. So at 107.9, your acquisition cost, in other words, right? You buy this note once we originate here in the next probably week for 114,900 in first lien position, only lien, first lien for $1,300 a month. You cash flow almost $15,000 a year being the bank with no landlord and tenant headaches. You have a collateral out in the market, a double underwritten performing borrower, and in a desirable market at that. All of our properties that we bring to the table are in demanding markets that are moving and actually people moving to desirability, moving to development, moving to all the above. So know that, this is not stuff out in the boonies. These are highly desirable areas in units, homes, whether manufactured housing or single family residence. And our hedge is in the affordable housing market. Why do we hedge in affordable housing? Well, it's a state of emergency to be providing solutions for people to pull equity out of their property, with sufficient cushion for us, or solutions in literal the definition of affordable housing in the Arizona market. It is one of the best places, I think, to place a bet. Why? Because, that's not going anywhere unless labor and material costs go down. By the time they go and try to build an affordable program, whether single family or multifamily, by the time they price in their return on investment, their carry cost, their labor and material costs, the permits, the time it took them to build the property or even the multifamily commercial unit, it's now exceeding what the market facilitates and demands for the affordability. So, diamond in the rough programs that we provide and cultivate over 8-year business in manufactured housing. Jason and James and Todd have been in real estate probably 30 years. We have 100 years of real estate expertise and development, private lending, fix and flip, wholesaling, small multifamily, value add residential real estate. Win Mobile Homes has upwards of 15, 20 doors right now in rental strategies of single family residents. And we do all of that to bring these available opportunities to our passive partners and show them the backdoor view of how to actually earn a rate of return nowadays. To try and go buy a single family residence right now and cash flow that home with a conventional real estate strategy, you're literally left sitting on money in your account losing at this point because nothing cash flows unless you're buying subject to and know how to do that savvily without having the bank call the mortgage. That's just one case specific scenario of, why people need to pay attention of what's going on in the financial market, where to actually perform, and what's insulated from artificial intelligence and all the huge market shifts going on in the world. You know what it is? It's housing. AI is not going to get rid of housing. AI is not going to get rid of lending. This is the next frontier to safe haven investment strategy, for safety and stability. I know a lot of high net worth investors that have money in money market accounts, in bonds, low yielding programs because they just want to be able to sleep at night. Like, what a travesty that is for the market right now to have people literally bleeding to death from inflation and being scared to make a move in any direction, and it's truly a lack of education. I fully believe that. Why? Because not that many people know you can even buy a mortgage, buy a note, become the bank in a private lending component. And at that point, once people really start to comprehend and realize that if you have your due diligence check boxes and risk mitigation put in place, that's your best foot forward for an actual return on investment nowadays. James, what are your thoughts on that?
Yeah, you know, uh, I think a lot of note investors that have gone to note education, there's hundreds of thousands of real estate investors that are turning to notes and the opportunity. The big
Yeah.
challenge that has happened over the last 10 years is that historically, those note companies like Note Expo and Eddie Speed and so forth, they all taught about investing, and everybody ran to Florida and the Houston, Texas, and San Antonio, the Texas markets, and the Midwest market, because historically, before Blackstone came in and pushed all the pricing up, you could buy a house for 50,000, 60,000, 70,000 and do a note and get a great return and know that, yeah, maybe the house won't appreciate, but it's consistent rental income or consistent opportunity. Well, with Blackstone coming in over the last 5, 7 years, they've gobbled up all the inventory, turned the entire country into a rental market, and has really escalated the pricing of housing. Where does a note investor go that wants to invest 30 to 100,000 or less? It's really hard. You can't do it in Chicago. You can't do it in Indianapolis anymore. You can't do those soft markets that, personally, I would rather invest in a dynamic market like Charlotte, North Carolina market area, Florida market area. Arizona is consistently a top 5 market in the country. So the interesting thing of it is that you have thousands of note investors that may have an IRA and they've got a couple 100,000 in the IRA and they're like, hey, I want to diversify my investment. I don't want to put all my money into one specific deal on the hopes that that one deal is going to pay off, but I really want it to be in real estate. And I took this expensive education course of real estate with Note Expo or Note Investor Group or whatever. And I have the checklist. I know what I want to do, but where do I deploy it and get a quality return? That's why we're on this Zoom today, because we're providing two ample solutions: qualified second lien investments, or you could do a straight direct investment with us on our manufactured homes, which is kind of unique. But manufactured housing is the last location for low cost housing in the country. It's the last one, and it's become really revolutionized because institutions, the Blackstone institutions that bought up all the single family homes, there's institutions that have bought up now all the mobile home parks, and they've raised the level of requirement to actually even own a manufactured home in a park. So manufactured home investing has become a new little niche that we as a company have really embraced, because I personally, as a note investor and real estate investor, was looking for low cost housing solution, knowing that it doesn't matter whether the economy is running like this and is up or the economy is completely falling down. People need a place to live, and most people inherently want to become homeowners. So we've bridged that gap and figured out a way how to create home ownership while offering a great return for our investors for a long-term investment strategy, where the investor gets a qualified buyer that is actually, number one, they're not just qualified once, they're qualified twice. They have to get approved with the mobile home park. The mobile home park does not allow people that have felonies. They never allow an eviction. So if these people have ever had an eviction, they're completely restricted. They look at 2 years worth of income. They look at 600 plus credit score. With today's interest rates, how many working class people actually have a 600 plus credit score? Probably not that many. So they really carve out a tremendous amount of people in the market, and those people are renters, and they're going to be renters forever. But there is a segment of people that are currently renters that want to become homeowners. They've got a great credit score. They're paying their bills. They have proof of income. They've never had a felony. They've never had an eviction, but they can't afford $450,000 for a home. That's what's been our solution on with our mobile mailbox money and Win Mobile Homes. That's been our solution in the Arizona market, and we're looking at possibly even take it to the Florida market and other markets. But as we did that, we were introduced into the second lien investment strategy on single family homes with Jason, who's on right now. And we think it's just as strong as an investment, that we still get the lien position. We verify the first lien to make sure it doesn't have too heavy an escalation clause. There's no other dynamic liens associated, like any lis pendants of lawsuits or anything like that. And we're helping out the homeowners at the same time. So in one sense, if we're helping out, we're either helping out a buyer, bringing them in from home, they wanted to get into home ownership and they can't get lending in a traditional sense, so they come to us for financing. That's at a convenience rate. Or we look to the single family home on second lien investment. So a second lien investment could be anywhere from 30,000 to 100, 150,000. It could be, but we consciously look at what's the overall cost relative to the as is value on the property. So we think in summary is we've got two great solution options for an investor that wants to make an investment and get a great passive return and live their life using their self-directed IRA or whatever that they're using. I think if I didn't know about this business, if I wasn't a partner or owner of this business, I would invest in this strategy instead of having my money in the savings account or IRA. I'm going to get a much greater return than that. So that's where we're at. Alden, I think, is showing the screen right now in regards to a live inventory that we actually are looking for note investors to invest with us on. And that's why I was mentioning, Catherine, the best bet is to get people to go to the website, mobilemailboxmoney.com. Sign up, as you see right there. It's a simple sign up. You just put in your email, create a password, and it automatically gets you access to our actual inventory in Arizona or Florida, and then we're going to have other market inventory. So we're moving quickly, where the website's not moving as fast as us as the stabilized information. So on the top, it's going to probably say, instead of saying Arizona and note inventory available, it could be, because we're actually starting to offer some national inventory. You're going to see Carolina inventory there and Texas inventory in other markets besides just Florida. So we're excited about it. And that's why we decided to start doing these weekly meetings, because it's really important for us to be able to live answer any questions of a prospective investor. As they have questions, we want to answer them and be very candid in regards to the opportunity, because we think that there's a great opportunity at a low cost entry fee on each one of these deals.
Agreed.
See, you're my proponent.
So
Sure.
we're gonna talk about this last deal here. This is lot 32 in Sierra Estates Mobile Home Park in East Mesa. It's actually a home that we bought for like 6,000 bucks. Put a new roof, new windows, painted the home, put in new granite, new cabinets, tile backsplash, tile showers. And it's currently pending to a qualified buyer who's actually, I think, about to be approved today from the park. They've been through the underwriting, they've been approved via Dodd-Frank, and we're looking for a lender. This property is pending at 89.9. The balance principal or your acquisition is 87.9. The buyer will pay like 3,000 in closing fees, as well as their $2,000 down payment in a family park. This 3-2 at 87.9 as the UPB, known as unpaid balance, on a 20-year term is paying 1,093.05 a month. And that's in a institutionally owned community. So for $250,000, we've got positions immediately available, paying double-digit interest rates outside the stock market and collateralized lending opportunities. That's what we call mobile mailbox money, cash flowing in a time when it's needed most in a feel-good investment strategy. We are here to help and serve a needed purpose now more than ever, because there's so much people in need right now, so many people as far as investors needing their income-oriented investment strategy, so many homeowners struggling, so many new buyers that have been left out of the conversation, from new homeowners, retirees, veterans, and all the above. Currently, today is September 11th, and we want to pay homage to all those that have fallen. The nation is in truly troubling times right now, and it's important to do the right thing now more than ever. We're called to serve at the end of the day, and it's important to put that forward. So just want to share one last little video with you guys before we go, and hopefully you guys will reach out with any questions. Call today for a special offer at 602-888-CASH or invest now with Silvercrest Opportunity Fund.
Today, I'm here to talk about an investment strategy that's not just smart, it's impactful. Affordable housing. For decades, investors have been sold the same story: projected appreciation, equity multiples, someday value. This is speculation, a bridge built on hope. At Mobile Mailbox Money, we build stability, bridges secured by notes on affordable housing. Contractually agreed upon income. No tenants, no repairs, no surprises. Just consistent cash flow secured by notes on affordable housing. Projected appreciation won't pay your bills. Contractual cash flow will. Be the bank at mobilemailboxmoney.com.
Any final questions from anyone? Clarity? We do these every week. I encourage you to attend weekly. We provide unfiltered value. A lot of people go pay for big education, from all the various note platforms or local real estate investment associations. Talking candidly here, about the ins and outs and snags of capital investment in the space. Any final thoughts here?
What's interesting is doing these events, it's just a great learning process. We have a lot of people on this Zoom call right now, and I think the nuggets that we actually put out there and the fact that Jason has new inventory every single week is actually really pretty cool, because that inventory he's showing this week, next week it's going to be probably a different set of inventory that's available, because somebody always commits in the same week because it's low entry fee for those deals. So if you're interested in investing with us, please reach out. Alden happened to give our numbers. Our direct office line number is 602-888-CASH or 602-888-2274. Or you can always go to mobilemailboxmoney.com, and we're pretty diligent in regards to trying to post this inventory up, but it does change on a regular basis. So reach out to us. We'd love to talk with you more and see how we can create an investment strategy for you.
And if you're too busy to vet deals, if you're too busy with your life, too busy with your W-2, too busy trying to spend more time with your family, invest passive with Silvercrest Opportunity Fund and start cash flowing in as little as a 30-day program for 10% return for 1 year, 12% return for 3, or 14% return. Wow. For 5-year term, that's investing in double underwritten, second lien, high equity cushion, risk mitigated private lending programs. Appreciate you all being here today. See you next week, every Thursday at 12 o'clock Arizona time. Go back and view the previous vlogs, the podcasts, the client testimonials, the interviews with industry magnates in every different sector, from Mike Del Prete, Arizona Real Estate Investors Association, to Matt Rosen of American Lending Conference, to Mark Monroe of the Seller Finance Coalition, to Eddie Speed of the Note Expo, Nathan Turner of Diversified Mortgages Expo. You know, the list goes on. Appreciate you all being here today. Start cash flowing and one step closer